tell you. For me, I got into a variety of different deals with different people. Now, that comes with its own set of challenges, I want to warn you, right?
Okay, Pat.
Right? Depends on your personality and your. Oh, and I should point out, Dylan, who I bought my first. Well, we bought a cash deal from, and did the fix and flip with Imelda and Alexa, who's not here, who I've never met, and his wonderful, I don't know, wife or girlfriend is now selling the property for us. The point is, the resources that you need for everything that you can do in real estate are really right here in the room, right? But if you don't know who those people, Cindy, who helped me with my first sub-2 short-term rental, they're all right here in the room. But if you don't know who those people are and you haven't spent time cultivating that relationship, you won't know that they are there to help you do something, acquire a property, dispose of a property, set up a property, lend to you, be a borrower, etc. So what happened for me the first year was I did a little bit of everything, and I very quickly realized what I like and what I don't like, right? And what happened was it started to coalesce for me. I bought myself another couple of jobs, and I was like, oh heavens, I don't really want to do this. So now I know I don't really want to do this, and I started to coalesce around a couple, like 3 main themes for me that now I know that I really want to focus on. So I want to focus on larger assets. So I am a real estate professional, and I'm married, filed jointly with my husband. So I control all the finances in all of our businesses. So as Mergen was talking about these tax strategies, right, I had to get really smart about the tax strategies. Because I control all the money in all of our businesses, I can pay my husband a lot more and just buy a whole bunch of assets and accelerate the depreciation and write it all down. Or if I don't have great opportunities to buy those kind of assets, and mostly we do because we can buy seller finance and subject to, etc., then I can titrate my husband's income down and then not buy that many properties. Like I have the ability to move a whole bunch of levers that allow us to limit, and in fact actually wipe out our tax liability altogether. In fact, I pay no tax this year at all with my husband jointly because of the accelerated depreciation in all of the assets that we own. So that was an amazing, this all works, this is fantastic. So what happened as I got a little closer toward the end of my first year, I realized, what do I really love to do? So it coalesced really around 3 main themes. I love to be a lender. Nothing makes me happier than helping somebody do what I love to do, right? I love to fix and flip. I'm an active investor. I like to be actively involved in the deal. And I love it when I see somebody else who wants to be actively involved in the deal. But I recognize that new investors have a hard time getting second position money, really hard, right? And I'm okay second position, and somebody here might poo-poo me, but I'm actually in 3rd position on a deal because it's a deal. It's okay, right? And I have to be comfortable knowing what your risk is, and my tolerance maybe is a little bit higher than maybe the average person. So I love being a lender, but that is one arm, right? It's totally passive. Well, it's not totally passive because sometimes I'm involved in helping them make decisions, but it is generally totally passive, and I lend out of my 401k. So all of that money is a bucket that goes out. But then I'm actually active over here. And in the first year, I actively purchased properties, BRRRRs, flips, etc., just to figure out what I like. But I now know I don't really love that because I'd have to do a lot of them to make the income, right? It's fun at first, and then you realize, like, how many do I have to do before it really moves the needle, right? A lot. And so I realized, oh, I don't really want to do that. I want to buy larger assets. And so started to look at what kind of asset classes might I be interested in. So small boutique hotels, right? I connected with Mergum in Chicago. We had lunch in our offices, connected with another person who's also interested in helping to do that. And so we created a loose idea around, let's look for really good deals in small boutique hotels like STRs, like Mergum was talking about, where we can force the appreciation and get out in 18 months with amazing returns, like millions of dollars in returns, right? Because you can't do it by single family homes. We're not talking about millions of dollars. So I started to coalesce around the idea I'm still going to get the depreciation because I'll have the asset, you can do the cost seg, but these are larger deals. Great. Then the lending piece, I love that. And then one other sort of epiphany came to me as a result of being in the group and connecting with a variety of different people. I realized, especially as a lender, run out of money really fast. And I didn't think that we'd run out of money very fast, but I have two partners in Alaska who oftentimes will lend alongside me. So if I don't have enough money alone, I'll go to them and say, can you fill in the gap? And we won't syndicate because it can take too long. So if you're trying to buy a house, right, how long is, or you're trying to buy maybe a larger property, how long is it going to take? So we will lend alongside each other. Like I said, sometimes I'll go in third position. I'll just go third position to them. And what we realized was, well, sub 2 sometimes has some difficulty, and that is getting second position money. So maybe you get hard money, and that alone is very difficult, but then you have to go to a private money lender to get second position money, and that can be very difficult. So I sort of looked at that and I said, well, I love being a lender, and I actually really like talking to people and helping people understand where they can place their money to make more money, because I've experienced it now myself. And I realized, well, I need to build a bigger boat. So I decided that I was going to raise a real estate fund. Guys, I don't come from the world of finance. So the idea of a real estate fund, actually Pace said to me, like, no, you raise a fund. And I was like, what, a fund? Oh, well, that's an idea. It was like, boom, this little light bulb went off. And so with my partners in Alaska, we decided we were going to raise, well, at first it was a multifamily fund, but now it's going to be a debt fund. And the debt fund is really essentially created so that we can help fund all of the kinds of deals that you guys do, right? That we do in land. That's the whole purpose of the fund. And it was essentially created to fill a gap. And the gap is, we got to get hard money, then we have to get second position money. You will never have to get hard money and second position money again. You can just come and get unloan, proof of funds, the whole thing from the fund. And I came up with the idea because I realized I have a hard time getting hard money and then second position money. And it's nerve-wracking. When we bought your house, right, the as a wholesaler, right, all cash buy. We did not have that proof of funds. You politely waived it, which was great. It was like, can you send me a proof of funds? I was like, well, fuck off. What do you mean? Don't be ridiculous. We're not using our own money, and I don't have it yet. And I was like, we're in sub 2, right? He's like, yeah, get it, never mind. And then, right, had to go and get first position money, and then Melda had to bring the second position money to the table, and it was like a big deal. So we looked at that and said, well, this is a need in the community, right? Why don't we create it? We can create the things that actually solve problems for all of us. So those are the 3 things that came about as a result of what I went through in the first year.